Could please do a sound check. If you just joined us on Zoom, I'm waiting for a sound check. Can you hear me? Can you hear me? Awesome. Thanks. Appreciate it, Charles. Hey, Charles, did you notice I got something posted early this week for you? Cool. I'm going to make a couple of suggestions that are not in the assignment in Blackboard, so pay attention. I'm going to make a couple of suggestions that will impact the outcome of your assignment and the outcome of your financial plan. So I posted it early, but the problem with posting those assignments early is always that I tend to make some changes at the last minute. So I'll make some changes today, and we'll talk about those as we get started. We're going to talk about retirement planning. Specifically, we're going to talk about how to calculate the cost of retirement. So last week you guys did you did a similar assignment. This week I'm just going to spend some time reviewing your retirement analysis portal in your financial plan, and give you just some time to get more familiar with your financial plan and how you use your financial plan to calculate the cost of retirement. So that is what we're going to be working on. I'm going to check out the chat here. No questions. If you have any questions, please post them now. We've got a couple of minutes before I stop admitting folks into the Zoom room. So, any questions in the classroom? No? Okay. This classroom is so full it should be illegal. I mean, there's no room for your elbows. It's packed. Some people are sitting on each other's laps. You should be here. It really is. Hey, Ashley. Ashley, there's not going to be any room for you to sit. I'm sorry. You're going to have to stand. I'm kidding. There are now a whopping, I'm not even going to say how many students are here, but it's not very full. So welcome if you're on Zoom or if you're on the Facebook or the YouTube. Welcome, welcome. Do leave a comment. Let me know you're watching, you're listening. If you're on Facebook or the YouTube. Okay, we're going to get started. It is now 10:03. We still have a couple minutes. Hey, I'm getting on a plane in the morning to go to Michigan to see my mom and my family. So I'm kind of excited. I feel like I'm taking a late spring break. So no questions. There are no questions posted. Oh, will we get points off for not having a class collab for week 9? I didn't see one. Did we not have a class collaboration? Okay, no, then you won't get any points knocked off. We did have a quiz though, yeah? Whoa, what happened to my screen? So yeah, no, the answer to that question is no, Serena, you will not get points marked off because I didn't post that. This week I did, though. So we have 1 minute before I stop admitting people. Let me tell you what this week's class collaboration is. So I'm going to jump into this plan. I'm in Billy's plan, just like your plan. You have a plan. So if you go to your plan, you should be able to see tasks. Aiden, you're not logged into your plan right now, are you? Can you see tasks? Do you have any tasks assigned? There's a new feature here, and I'm trying to find it. But you see there's a task for you? Yes. Cool. So Aiden is in his plan, and he sees a task. I wish I could find the task, but I'm not going to spend time doing that. I'm just going to tell you there are some new features in your planning portal. One of them is the ability for me to post tasks for you. So I posted a task for you in your plan. So find that task and just take a screenshot, and that is your class collaboration. just to show me that you're engaged in your plan and you're able to find that. I'm playing with that a little bit. I may be using that more actively moving forward, but tasks are something that we use in the financial plan. If I was your advisor or part of your advisory team, there may be things that need to happen in your financial plan. And so this tool gives me the ability, or anyone on the advisory team, the ability to post tasks. It just helps us keep up with the steps involved in managing your investments and your accounts. Again, that's designed for the benefit of the advisory team, but it's also really for the client. So just something I'm playing with, but that is your class collaboration for this week. Okay, so I am going to admit whoever's not admitted. I'm going to close my chat so that folks in the classroom can see the screen. Let's see, do we have anybody waiting to get in? Give me just 1 second. Looks like everybody who is waiting is in, so we're closed. Now, if you're not here, you're not going to be admitted. So you'll have to watch on Facebook and YouTube. Okay, let me get that out of the way. Okay, I think we're ready to go. So first thing I want to do is just point you to this week's assignment. I posted this in Missional Money just so that missionalmoney.com is kind of the new site that I'm transitioning to for the courses that I'm building. But I posted week 10 assignment there, so you'll see I posted the same thing in Money Study Group. And this is pretty much what I posted in Blackboard. So I'm going to spend some time really reviewing this week's assignment and going over what's involved in the assignment. So let's get to it. It's really all about retirement planning. So one of the things I want you guys to do with your plan is I want you to play with your probability of success. So let me jump into a plan. I'm going to go back and forth from Billy's financial plan into the assignment. But I really want you to be familiar with your planning portal and all of the elements that are there. And most of you, I think, are, but today should help you do that. So I'm looking at Billy's plan. This is very similar to what you would see in your plan, with one big exception. You see this lower tab called Snapshot? That's brand new. That's pretty cool. I haven't gone into your plan and added that feature because it's brand new and I just haven't had time, and I'm going to Michigan tomorrow. So I won't probably do it for this week, but I may plug this in for your benefit before you do your capstone assignment. The snapshot is really just, like I said, it's a new feature in the planning portal that we just added, and it allows you to have a snapshot of all of the major elements of your financial plan. So if you jumped into your financial plan like you're going to need to do this week as you prepare for your capstone assignment, as you jump into your financial plan and you play with the things that relate to your probability of success, when you make changes to those data cards, those pieces of data, they're all connected with one another and they all develop that probability analysis of success in your plan. And so they all end up in this snapshot for the most part. So this is a cool feature. And if I'm looking at your plan, just so you know, I jump in here and this snapshot gives me a quick overview of what's going on in your financial plan. So just wanted you to see that kind of show and tell. Again, that's not in your plan this semester, but next semester. If you happen to fail the course and you have to take it again, you'll get to see the snapshot next semester. So I hope that's helpful. But for now, let's look at the main place we're going to go is the upper tab is called retirement. So if we go to retirement, we see retirement analysis, and that's the area we're going to play with the most. You're going to take lots of screenshots this week in your assignment. And one of the things I want you to know is this week's assignment is really, if you do the work in this week's assignment, make sure you have a good system for saving your work, because when you do your capstone assignment, which is worth 200 points, you're going to replicate this assignment. So this is kind of like your trial run. It's worth 50 points. You'll get extra points if you turn it in early, Friday by 3 p.m. But it's really, this assignment is your capstone assignment. It's just your trial run. So I'm not going to be too critical when I grade this. Like, I'm not looking for perfection. I am looking for you to get involved in your plan and look around and do a little experimentation and create some, make some changes in your plan. So we're going to talk about those changes, the changes that you're going to want to make in your plan, not just this week for this week's assignment, but more importantly for your capstone assignment. So just, you may want to watch this more than once if you're struggling. But the truth is, most of you are doing great and you're not struggling at all. And so I expect that's who I'm trying to teach to today, is the students who have already turned in your assignment. You already got 60 points for turning in last week's assignment, and you did just fine. Moving forward, I'm going to help you tweak a few things, and I'm going to help you adjust a few things. And mostly, I want to help you understand a few things. So that's what we're going to do. So when we go to retirement, remember, what we're looking at is this action item. This is where you will go to open a window into your plan, and this is where most of the work gets done in terms of a workbench for a financial plan. So if I'm your advisor and I want to see what if, if I want to play with some what if scenarios to see, what if you retire later? What if you put more money into your plan? What if you save more money? What if you invest more money? All of that is right here. So you've already hopefully been playing with some of this, but I just want to point out that what changes your probability of success are the inputs that we have here. So, for example, Billy's retirement age is currently 55 years old. Now, you get to choose what your retirement age is, but what I want you just to pay attention to is that if you change it, if I can figure out how to do that, if Billy decides to retire at 70 and we hit refresh, that should change his probability of success, but we see it's not changing his probability of success. So this is one of the questions I get from students is, I've tried everything and it's not, moving the needle. And so that's what I want to help you figure out in your plan, is how do you move the needle? And so we're going to play around with some of that, but this is some of the things that, some of the inputs that you have to play with. So right now, we're going to talk about asset allocation. We spent a lot of time, and we're going to spend more time on investments and investment strategies this week. You're going to review some of what you learned last week and the week before, actually, about investing. So it's important for you to understand that one of the things that really moves the needle on a financial plan is your investments. And so when we talk about risk, that's what we talked about, 4 investment strategies designed to help you maximize returns and minimize risk. Well, when we're talking about those strategies, we're talking about asset allocation, diversification, dollar cost averaging, and portfolio rebalancing. But when we talk about asset allocation, this is where that happens. So I told you asset allocation is the single most important determinant of your portfolio's returns. But it's also a very important ingredient in your retirement plan. So if Billy happens to be invested in a very conservative way, then his investments are not going to give him better returns, okay? So if you take more risk, the chances of having greater return over time goes up significantly. And if you're afraid of taking risk, then you're going to have lower returns. So when we talk about asset allocation, one of the things we have to talk about is how much risk do you want to have? How much risk do you need to have in your portfolio? So let's just take a look at Billy's investments and see what his current allocation is. So it looks like he has growth as his current allocation. So when you go into your plan, that's how you can know what your allocation is. You just go to your investment tab and look and see what it is. And if you want to change that, you can change that right there just by clicking on which pre-built portfolio you want to use. And the names kind of are a clue. They're related to the amount of risk you have in your portfolio and your asset allocation. So those are some things that are going to have a big impact on your probability of success is your asset allocation. Let me go back to the assignment now and just go through a few things. So here's just some questions. The main idea, the big question that every retirement plan is designed to answer is how much? How much will it cost for you to retire? And so to answer that question, you have to ask a lot of other questions, which are actually part of what you see when you go to your retirement plan and you go to retirement and you go to this action item. That's where you see all of these other inputs that are built in to the question, how much will it cost for you to retire? All of these pieces of data are built into that. So how old are you going to be when you retire? That's going to make a big difference. How long are you going to work? Because remember, when you're working and you're contributing to your retirement assets are growing. But as soon as you retire, what happens to your retirement assets? You start to spend them, you start to live on them. So it makes a big difference. So Billy really wants to retire at 55, but if you look at his probability of success, it's not likely. So my job with Billy and Sally is to figure out, okay, how much is it going to cost you to retire? And if you really want to retire at 55, you're going to have to make some changes. So what are some of the things that you know just from being a little bit familiar with Billy's plan? Because we've talked about Billy and Sally in the past. What are some of the things you know about Billy's lifestyle, Billy's spending, Billy's plan that you would think, hey, if I was Billy, I would be looking at these things to change? What are some of your suggestions? Yeah, they had a lot of debt. So when we look at the debt, we go to the dashboard, we look at debt, and we can start to play with the strategies for how to deal with that debt. So the spending is a problem. First of all, we would just want to look at the budget. Does Billy have a budget? No, Billy hasn't linked his accounts, so this financial planning tool isn't going to give Billy and Sally the benefit of actually doing a budget. So they're going to have to do a budget some other way. How would you know what Billy is spending according to this plan? In other words, how would you know how much your plan is saying that you spend? Where would you go for that? So I'm in dashboard. Do we see spending there? What if I go to, where do I find expenses? Profile. Well, looky there. So those are the two upper keys I would say you get very familiar with. Is the dashboard. You have the dashboard in your plan, right? So the dashboard takes you to, you won't have the snapshot, so you'll probably end up on balance sheet. Is that right? When you go to dashboard, you end up on balance sheet. So that's a good place for you to just take a look at your plan. Yes, question on Zoom. No question. Okay. Sorry. Did you have a question? Cool. Thank you for that. Yep. So cool. So yeah, that's where when you hit dashboard, that's where you're going to be. But then don't forget, you have these other these other tabs. You're going to want to know where to go for these tabs to show what's in your plan. And I'm going to play with these again in just a minute. But so we've got dashboard and profile. The question was, how do we know what kind of expenses Billy has built into his plan? So this is where it is under expenses. I went to profile, I went to expenses, and this is where you were instructed to build your expenses. Now, you guys were supposed to do a detailed worksheet. I didn't make Billy do a detailed worksheet, but you guys should have already done that, right? And that assignment, that project for you was basically an opportunity for you to think about where are you spending your money. Now, so you need to do that. That's part of your capstone assignment. And this week is an opportunity for you to make sure that that makes sense, that you're spending, this is before retirement, living expenses pre-retirement. And then we're going to do the same thing for expenses after retirement, but where would we go to figure out the expenses for after retirement? So those are the expenses for Billy before retirement. But remember, our job in doing a retirement plan is to figure out how much will it cost for Billy to retire. It's your job to figure out how much will it cost for you to retire. So one of the things we got to know is how much are you going to spend, not just now, but after you retire. So where would you go to find out how much you're going to need to spend after you retire? Because that's a big part of the cost of your retirement. So let's take a second and think about where would you go to see how much you're going to be spending after retirement. So you could go to goals. Yes, that's one way to do it. And you could click on retirement expense, that's a goal, and you could click on that, and you could do if you should probably do a detailed. In fact, by the time the capstone gets assigned to you, I'm going to want you to do a detailed. So you might as well do that this week. Is it going to be the same as the detailed worksheet you do for your expenses before you retire? What do you think would be different after you retire? So you got to look at what are some of the things you're doing before you retire, and then think about what are some of the things you'll do in terms of activities in your life after you retire. What do you think will change? And I don't expect you guys to be thinking about what are you going to do in retirement. It's probably not big ticket item on your daily thought list, but just for the sake of this present moment, what do you think might change in terms of your expenses after you retire versus before you retire? Travel, would you be more or less travel after you retire? And if you travel for business, probably your company's paying for that travel. So you may travel a lot before you retire, and maybe that's not an expense. And just maybe after you retire, you decide you don't ever want to travel again. That's possible, but most likely, Ashley, yeah, travel will be something you'll want to do more of for fun when you retire. So you would want to have, you'll want to think about that when you play with your expenses after retirement, because that's going to make a difference. So that's one way to figure out that's one place to go to see what your cost is after you retire. Where's another place you could go just to see a quick number? What if we go to retirement, click on that tab, retirement. Again, there are really three upper tabs all of the upper tabs are very important, but the dashboard on one end, the profile on the other, and right in the middle there is retirement. And that's where you hit this drop down list and you can see right there retirement expenses. You see how that flows right in? So according to Billy's goal, how much he's going to spend in retirement. It flows right into this field. But if you want to see a what if you want to change that, this is where you could quickly change it and see the needle move. So let's just play with a couple things. Let's say that Billy's going to retire at 70, Sally's going to retire at 70, and their monthly expenses are going to go, let's just say they go down to, just for fun, because we have a problem here and we need to figure it out. Let's say Billy starts saving 15% and 15% for Sally, and their joint taxable savings, they're going to start saving $15,000 a year. Man, what else? Pre-retirement living expense, obviously that can't be zero. Let's just see if they can get along with $7,500 a month. And the asset allocation, let's go with aggressive. And let's just hit refresh and see what happens. Does that move the needle? It does. It moves the needle a little bit. But there's still something going on. If you have a retirement plan that's only 11% probability of success, I would say you have some work to do. And Billy and Sally have some work to do. And I'm not going to jump in and do all of that work today. I just want you to see where you would go to start to figure out some of the things that are off in their plan so that you can do the same thing for your plan. Okay? So does that make sense? So we now know where to go to see what are the expenses that are underlying this financial plan for your plan and for Billy's plan. So you go to profile, go to goals, and you'll see those are the things that are going to cost you. Those are the things that when you go to profile and you go to goals, these are the things that your plan is built on. So these are the things that you want to do with your money that are competing against one another. And one of them is to be able to stop working at some point in your life. That has to be a goal, or it really should be a goal. The truth is, a lot of people, I know a lot of people who really don't have a goal for retirement. What do you think they have instead of a goal for retirement? I mean, what would, if I said I know a lot of people that don't have a plan for retirement, they don't have a goal for retirement, what do you think their situation would be? How would you describe it? Do you know anybody like that? Like, I've got a good friend who's an attorney. He makes a lot of money, and his wife spends a lot of money. And so he tells me he's never going to retire because he says he's going to drop dead at his desk. He likes what he does. He thinks he'll work forever. So that's his goal, to work forever. He can't, I know a lot of people like that. I know a number of people like that. So you don't have to have a retirement plan. You don't have to have a goal. But if you want to have some sense or some idea of what it's going to cost to retire, then this is a tool, this is an approach that can help you do that. Your financial planning portal can help you do that. And your goals, the things that you say, I want to make sure that I set aside money for this, it gives you an opportunity then to see, okay, if I do that, what's it going to cost me? How much do I need to save? How much do I need to invest? How do I need to invest to do that? So hopefully that's helpful for you as you get ready for this week's assignment. One of the things I want to point out for you guys is a lot of you have said, okay, so you went to goals or savings, and you set up, like Billy and Sally, you set up your 401k, or you set up your taxable account, and you put a goal in, okay? So that's great, but what you didn't do, when we go to net worth, and this is Billy's plan, it's different than your plan, but when you click over here on investment, you see that he actually has some investments. Now, if you set up you told your plan that you're going to contribute, and this was part of your assignment last week. You were going to do a little research, figure out how much money you were going to make each year, right? And how much your company match was, and you were going to contribute. So you built that investment or that savings goal. You put that in, right? Like, let me open this up. You guys, this looks familiar to you, I hope, this data card, because you did this, right? You said to your plan, I'm going to save in my 401k, all right? And you said you're going to save, in this case, Billy was going to save 10%. So if Billy made $100,000 a year, how much would Billy be saving? Yeah, 10 grand. Super easy math. So if he saves 10 grand and then he gets a match of how much? He has a 5% match. So if he gets a 5% match and he's saving 10%, he saves 10 grand. How much does his company match? 5. So how much total should Billy have in his plan after 1 year? 15 grand. So if we go over to profile net worth and we go to investment, we should find an IRA account for Billy that has at least how much money in it? 15. Now, I'm going to suggest that most of you don't have an investment account in your plan that shows the amount of how much you plan to invest in your IRA, in your 401k. So I would put that on my to-do list, and I would make that part of this week's assignment to go ahead and say, oh, okay, I set up my plan, my goal for saving, but now I need to go and actually pretend that I have an account that is actually funded, that actually has some money in it, so that my plan, my probability of success is likely to go up. And here's another thing I want you to do. This is a big ticket item. This is not in your assignment. I will probably add it. It's not currently in your assignment, but I'm going to add it somewhere in here. When you get to your probability of success, chances are you're going to figure out a way to move the needle. Most of you have figured out a way to move the needle, and what happens is either you're having to figure out, hey, if I just put more money in and I have lower expenses, and you figure out a way to make the probability go all the way up to 100. Like half of you have done that. The problem is when you do that and then you look at the number, it says you have like $30 million when you retire at the end of your plan, or 40 million or 50 million. Every semester we deal with this. So, I mean, that's okay. I'm not grading you on perfection. I just want you to learn, what does a retirement plan consist of? What are the pieces of the puzzle that you really need to pay attention to? I'm not asking you to be an expert in creating the perfect financial plan, but if you create a plan that has $40 million when the plan ends and you don't tell me why it's so much, you're going to get a deduction on your capstone. Okay, you may not get a deduction this week if you get your plan off of 0 and you get it to be, oh, yay, you figured out what to play with to change it, and you end up with $30 million in your plan when it ends. I'm probably not going to give you a deduction, but I'm reminding you now that when I grade your capstone assignment, if you have $30 million in your plan when it ends, or 40, or even 20, or even 15, and you don't tell me why, I'm going to be like, you missed something. You're going to get some deduction. Does that make sense? So one of the things I want you to do is I want you to change your birthday. Because one of the reasons you have $100 gazillion at the end of your plan is because you're 20 years old and you started saving, 50 grand a year in your plan, and it just is a ridiculous number. So what I did for Billy, I did the same thing for Billy just a few minutes ago. I want to show you how to do this because I want you to do this. I want as we move forward, as you build your financial plan, I want us to pretend that you're at least 10 years older than you are now. Because what's going to happen is you're going to get to see a little more lifelike situation, like what would it look like 10 years from now if you did the things I'm teaching you to do now. So let's just fast forward the clock and say that you're 10 years older. That'll do a couple of things. It will make your plan a little bit more realistic in terms of, what's going on in those accounts, those investment accounts. But it will also change those projections dramatically, because if you're 20 years old and you're doing these things and you add, because I'm going to tell you next week to add 3 types of accounts. And I'm going to ask you to go into your plan and just put some money in those accounts. Just like I just asked you a few minutes ago to go and create a 401k investment account and put some money in it. So I'm going to ask you to do that again next week. We're going to put some more money in it. We're going to put money in an IRA and a Roth IRA so that I can show you the benefits of tax-advantaged investing. That's what's coming. But today I'm saying in this week's assignment, show me that you're paying attention and give yourself 10 years, or take away 10 years. It's really what it means. Make your birthday show that you're 10 years older, and put an account there for your 401k so that when you play with your asset allocation, it really does move the needle. Because if you're 10 years older, and you're investing like Billy, how much is he investing in his 401k? He's putting 10 grand in, the company's matching it, 15 grand. So if we're going to pretend that you're 10 years older and you're Billy, then what do we want to make sure we have done in your 401k investment account? Over here, right here. How much would that 401k actually be then for you? This is Billy's. You see it's got a balance of 264. So I don't know what the number would be for you. But if you're pretending, which you are, that you got that dream job and that you're earning the amount of money that you would earn if you got that job, and you know what the company match is because you did a little research, whatever that match is plus your contribution equals an annual amount that you would have in that account. So now I'm saying you're 10 years older, so what do you need to do to that number in your investment account? Just multiply it by 10. So instead of saying, okay, 15,000 is what Billy put in, now let's say he put in 15,000 times 10 because he's 10 years down the road. So we have to go into the account and say, oh yeah, it's been accumulating money. Let's go ahead and put a number there. And you can really impress me by saying, hey, because I have this asset allocation, preservation of capital, which is super safe, which means it's not going to grow at all, or moderate, which means it's going to grow maybe 8%, or aggressive, maybe it grew more, then you can come back and impress me and say, yeah, instead of having 10 times what I put in for 1 year and I got matched, I got 10 times plus whatever growth you calculate. Does that make sense? That's extra. I know that's challenging. You don't have to do that, but I want you to understand what we're doing here. We're building your financial plan, and it's based on some projections. So make yourself older, but then go into your 401k and add some money to it, because that's what's going to move the needle on your plan. So I'm trying to help you create kind of an abstract plan that's based on reality for your life using your financial planning portal. So then you can make some additional changes in your plan too. And all of those, not all of them, but most of them are right here in the retirement analysis section under action items. So just pay attention to those. That's what's That's what your capstone assignment is going to be based on. Do you understand these? Each of these different pieces of your financial plan that will actually determine your probability of success. So let me just highlight something that we've already done, and most of you were very impressed with how this worked. In Billy's case, he has some debt. So how do we get to debt? We go to dashboard, we go to debt. Now I've undone what we did with Billy in his plan. Do you remember the credit crush assignment that you did? Where I told you I want you to go out and I want you to spend some money on a car, I want you to put some money on a credit card, and I want you to buy a house. So you did all that. It's already in your plan. And you've already done this. You've changed you've set up a debt payment strategy in your plan. Hopefully you saved it. If you didn't, you can easily go back and do that. But for Billy, he hasn't done that. So which one of these do you think is most likely to move the needle for Billy? Same for everything, highest to lowest interest rate, or lowest to highest balance? Yeah, I think. It's not always true, but it's usually true. But it's one way to find out real quick is just watch this graph change. So we're going to say that we're just now working on one little thing in Billy's plan. It's his debt strategy. Billy has some debt, right? And if we want to know how much debt Billy has, or if you want to know how much debt you have, we can go right up here and we can see details. And we can see balances. So over here, see that, right? That drop down right there? That shows us all of the things that Billy and Sally owe money on, just like in your plan. So if you have some student loans, you could have the student loans would show up in your debt. That's where they would show up. So Billy's got a lot of debt. If we want to see, what he owes for everything, we can just go and play with that and see it. And we can see what his payments are here. But what we want to do right now is we want to change the strategy. Highest to lowest interest rate. Don't forget to hit refresh. And let's see what that does. So it says Billy's going to save $37 million. That seems pretty ridiculous, doesn't it? But if you remember what we did is we took Billy's credit card and we gave him some high interest. And he's paying the minimum. Remember what happens when you pay the minimum? It's insane. It's ridiculous. And that's what Billy's plan is saying that he does. So if we use that strategy, it says he's going to be debt-free 298 months sooner. That's like how many months, how many years is that? It's like 20 years sooner. I mean, these numbers look a little crazy to me. And if this was your plan, I'd be like, let's look at that. Let's go see the details. What's really happening here? So we've got the strategy, payment, strategy. Oh, and the other thing we didn't do here, which you mentioned earlier, is if you're Billy or if you're Billy's planner, you got to figure out where's the money all going. And you got to reallocate. You've got to do something to get the spending under control. And in this case, Billy's going to have to do a little work on his budget. He's going to have to figure out where can he cut back. Is it going out to eat? Is it Starbucks? Is it going to the movies? Is it travel? Is it, buying expensive vehicles and paying a lot of interest? Where's he going to be able to cut back so he has a little extra money? And let's say that extra money turns into $1,000 a month. And so we add that here. And that's where it improves his results even more. But to do that, he's going to have to figure out where's that money going to come from. And he's going to have to make the decision to actually pay that debt off earlier. Because before, what we had when we clicked on payment is we had the current payment and the proposed payment was the same on everything. But if you look at it now, we should see that what it's done is it's taken the payment, the current payment for Sally's credit card was $125. That was her minimum payment. But because that was the highest interest rate, what the software has done, what the plan has done, is it said, let's put that extra $1,000 all into Sally's high interest credit card. And then it'll go to the next one and the next one. And if you want to see that, you can see the details, and you can go all the way down. But I'm not asking you to do that. I just want you to see how it works. So now that we've made that change, I'm just curious. I want to know if the needle got moved more on Billy's retirement. So let's see if we go right here and say, let's use the debt proposal that we just created, and let's hit refresh. Let's just see what happens to Billy's plan. I'm kind of hoping it changes. That's crazy. It went down. Wow. I wonder why it went down. I don't have time to figure it out at the moment, but if that was your plan, I'd want to know, why did it go down? How could it go down? I don't know, but I would, if this was your plan and you asked me that question, I would go and start to do a little research. I would look at the cash flows. So all of these tabs here, especially cash flows, will start to tell us what's going on. So we still see a lot of expenses. Living expenses are high. Debt is high, but look at the debt's going down. So that's where I would go to start to figure out what's actually, let's see the proposed plan. Maybe I was. So that's where I would go, and that's where you could go if you wanted to play around to see what's going on. I'm not going to do that right now. I just want you to see these are the areas in your plan where you can go to see what's going on. And I have no idea why Billy's plan didn't move the needle, but I'm going to play with that. Maybe I'll do a little video later in the week to figure that out. Any questions? No questions? No questions on Zoom? Okay, let me just jump through the assignment. Don't forget adding an investment. Most of you, you'll see a 0 there when you go to Profile Investment, and that means you haven't actually set up an account. Even though you told the computer, you told your plan that you do want to have a 401k, but you haven't set up the investment account. So you'll want to do that. Add your 401k, and to do that, you just go Add Account right there under Profile. Don't forget to change your birthday too. That's going to help give your plan a little bit more realistic look. And if you do that, if you change how old you are by changing your birthday, don't be shy about adding more money into your 401k. Like if you made yourself 10 years older, just do a little math and add 10 years worth of contributions. And if you're comfortable calculating how much it would have grown based on your asset allocation, then give yourself that additional money too, and see what that does to move the needle on your plan, okay? So that's something I want you to show me, just a screen capture of your goals, your income, savings, expenses. And the reason I want to see family is because that's where I'll see if you change your birthday. Okay, and you can leave a comment and say, I made myself 10 years older. So it's a really easy assignment. Just going to take a few minutes, but again, it's helping you prepare for your capstone. So I think it's a good investment. And then as we get into asset allocation, you're just going to go into investment and you're going to start playing with asset allocation. And I want you to pay attention to what that actually does. Like when you click on preservation versus growth, you're going to notice that the amount that you have in cash or US bonds or US equities, every time you change that allocation, it's going to change the percentages in these asset classes. Remember, we talked about asset classes. It's a really important part of investing. It's a really important part of asset allocation is understanding asset classes. So every time you change your asset allocation, you're changing the asset classes that you're investing in. And the cool thing about that is when you set up your 401k at work, you're going to select asset allocation and you're automatically going to be doing dollar cost averaging, because every time you get paid, your check, you're going to have a deduction from your check, and it's going to go into your 401k account, and it's going to purchase whatever asset classes you have set up in your asset allocation. Ashley, is that confusing? So, I mean, does that make sense to everyone? It's a lot of words, like a word salad. But think about it. When you set up your 401k, if you say, if you go into your 401k, it's usually going to be an online website when you set it up and when you rebalance and when you tell it what you want to do. Just like you're doing in your Bayrock plan, you're going to have a similar kind of deal at work in your 401k. And when you set it up, let's just say that you say to your 401k, I want to have 25% in US large cap stocks, the S&P 500. I want to have 25% in US government bonds. I want to have 25% in small cap, that's small stocks. I want to have 25% in international. So that's a really simple asset allocation. It's 4 different asset classes. So instead of all these, you would just see 4. And if you did that in your 401k, every time you get paid, that money's coming out of your check and it's going into your 401k. And because you set that asset allocation up the way you did, if you're putting $1,000 a paycheck into your 401k, 250 of those dollars will be buying large cap. 250 will be buying bonds. 250 will be buying small cap. So every month, every paycheck, that's what happens. And that means you're doing dollar cost averaging. Remember Farmer Joe? Remember how the price of cows never went over $100, but he made money because he dollar cost averaged into the cow buying business. And you will be doing the same thing in your 401k. So when the market goes down, you should be excited about that, because what's the market going to do over the long term? It's going to go up. And so by doing dollar cost averaging, paycheck after paycheck, year after year, your results are going to be much better. It's the best way to invest, I promise you. And your 401k becomes like the engine behind your financial plan. It becomes the engine behind how you can fund your goals in life, including retirement. So you're going to play with asset allocation this week, but it's not going to make much difference if you don't have any money. So you're going to pretend you have some money, because you're going to pretend you're 10 years older and you've been investing in your 401k. So then you'll get to see how that moves the needle. Okay? Any questions? Let's see what else comes. These are all just screenshots you're going to grab. As you're in your plan looking and playing around with things, just grab these screenshots and save them. And don't forget, you're working on this week's assignment, but it's really the same assignment you're going to have in your capstone. So do yourself a favor and be smart with how you save your work, because you may make some changes and some tweaks when you do your capstone, but you will make some changes, you will make some tweaks. They won't all be the same screenshots, but you will have the platform built. You'll have the basics built. And then finally, I want you to do a retirement calculator. And you can use you can Google the term retirement calculator. I don't care which one you use. They have them at every bank. They may have them in your bank's app, but it's a super simple way to calculate the cost of retirement. Now, I'm looking at the one on NerdWallet. This is just the first one I found, and it looks like maybe, I'm not sure, you have to put in your email. I hope not. But I want you to just, if you changed your birthday, if you said you're 10 years older, you can use the new birthday or your regular birthday. I don't care. But I want you to do a comparison between the plan that you're working on for your capstone and your retirement calculator, because I want you to have like a way to double check your work. So when you do a retirement calculator, it's a super simple way to say, I'm this age. I want to retire when I'm this age. I have this much money saved, and I'm willing to commit to saving this much money every month. Pretty much that's it. And then you're going to hit a button, and it's going to give you a calculation to say, here's how much you will have in retirement and how long it will last. There's tons of retirement calculators out there. They're super simple to use. They'll just take a minute or two. You can pick one. You can use the one that I gave you a link to, but just grab a screenshot and use that as a comparison for your own plan, just to see. So if your plan, your Bayrock plan, shows that you have $30 million when the plan ends, and your retirement calculator says you're negative 15 million, you know there's something there, and it's time for you to do just a little bit of research to try to figure that out. Does that make sense? So that's one of the things I want you to do in this assignment. Oops. Let's see, anything else? And I'll wrap it up. Make sure there's a quiz. Some of the questions in this week's quiz are the same questions you had last week. I don't want you to forget about the important things we talked about related to investment management and the investment strategies we covered. So you'll have a quiz. There's some new questions and some old questions, and be sure to submit one PDF file. And you're going to do a little summary too. Doesn't have to be much. I just want like a paragraph, a couple of paragraphs, a few paragraphs. Just tell me what you learned, what you're learning about the cost of retirement, and how your retirement calculator compared. So give me a couple of comments about what you see when you do that quick and easy retirement calculator compared to what you're working on in your financial plan. And then if you have any questions about your plan, put that in that same section, that same summary section. Like, here's where I'm struggling, here's what I'm not figuring out. Just tell me. I'm not going to grade you down because you didn't figure something out. I just want to know that you're thinking about it and you're trying some things and you're experimenting and that you're learning. That's really my hope. And then finally, how will you use this week's assignment to prepare for your capstone? Like, just tell me, I'm just looking for, I want to make sure you know that this week's assignment is a really good preparation for your capstone. This one's worth 50 points. You'll get extra points if you turn it in early, but your capstone is worth 200 points. So that's it for this week. Unless you have questions, this is already in Blackboard. I'm going to add the instruction to change your birthday, I think. That's not in Blackboard right now. So if you are not paying attention to this Zoom meeting, you will have missed that if you did the assignment already in Blackboard. So again, turn them in by Friday at 3 p.m. I'm going to be in Michigan, so I may not get to grade them, but you'll still get the points when I do get time to grade them, probably this weekend. All right, any questions? Hey, we're getting close to the end of the semester. And my hope is, and my expectation is, that most of you are going to be free to roam around campus and you won't have to be at class. Once you hit 950, you'll be good to go. So you can focus on other classes that may require more time. Question on Zoom? So you're not real. I can't hear you very clearly. You asked me to repeat what I just said, so I'll repeat what I just said. Is that the semester is coming to an end pretty quickly, and you need 950 points in this course to get an A. Most of you are going to get there early. In other words, you won't even need all of the points from your capstone assignment and the additional 200 points that you get for class participation, because by the time I grade your last assignment, you will be very close to 950 points. So that's good. That's part of the plan. It's what I expect, and more than half of you are on track to do that. And the reason we do that is so that you can have more time to focus on other classes where there is a final exam. We don't have a final exam, we have the capstone. So that's what I said. That's what I just repeated. Did that make sense? Or do you need more? You're welcome. So, again, this course, I want to just kind of mention, this is not a course that you take and you're done. This is a course that just gets you started in personal finance and financial planning. And my hope is that we stay connected moving forward and that you transition into the next course, which is free. It's at missionalmoney.com. You can sign up. I'm building that course now and next semester, but it's really the next steps for you. If you want to keep working in your financial plan, you'll use the same portal, the same planning portal. It's just a different course with a different focus. Instead of trying to help you get an A, it's actually, for people that want to do the things that I teach you to do in this course. So that's available for all of you, and I do hope that you continue your learning in personal finance at the end of the semester. But we are getting close to that end, and we have come to the end of today's lesson, unless there's a question. The hundreds of people who are in this classroom, they're not fighting for the door, they're sitting calmly. It's like, I remember watching a movie in Los Angeles, Schindler's List. Anybody ever see that movie? It was it was an amazing experience, because in that theater, at the end of that movie, unlike any movie I've ever seen before or since, nobody moved. That's what this reminds me of. Class is over and nobody's moving. I don't see tears. I don't see emotion. I just see a lot of people very content. Hundreds of people who are just sitting there, like that theater in Los Angeles. You have what? Oh, I don't know if that's good though, Charles. There's not much emotion in this, but Schindler's List. Oh, good, a cry of joy. Well, you guys have a great week. I'm going to shut down the broadcast. For those of you on Facebook and the YouTube, thanks for joining us. I hope you'll leave a comment, and check out missionalmoney.com if you want to learn more, if you're not part of the course, or even if you are. Have a great day. See you later. Thank you. Bye bye. Okay. Right. The class collaboration. Yeah. So that's a great question. So let me repeat it just so everybody can make sure everybody heard. The question was, she did the assignment, doesn't remember which one, but she did not complete the class collaboration. But apparently, the instructor who graded it didn't catch that and gave her full points. Her question is, does she need to be concerned that maybe that's going to catch up with her at the end of the semester? So that's a great question. Let me answer it this way. First of all, probably not, because that same professor who didn't catch it the first time is probably not going to go back and catch it at the end. On the other hand, I said at the beginning of the semester, you're probably going to want to keep all of your class collaboration screenshots, just put them in a folder, a digital folder, just in case we get to the end of the semester and I say, hey, I've got to make some deductions because you didn't fulfill that requirement, in my opinion. And if you save the basically your proof, your documentation, then you can easily come back to me and say, oh, I did, here it is. And I'll say, okay, I was wrong. And I'll give you all the points. But here's what usually happens. This happens rarely, but it's what usually happens with students who are missing assignments, really not showing up to class, asking questions that really have been answered multiple times. Those students will end up getting a deduction in class collaboration because I believe they didn't really participate at the same level that the other students did or the majority of the students did. So those are the students who should be asking, do I need to be concerned? Probably not. Your question is likely not. I'm not likely to give you a deduction later that I missed earlier on, especially if you're doing your assignments. That's the key. If you're keeping up with your assignments, you're going to be fine. But if you're missing assignments and you're you're getting deductions because you're missing half the assignment, you should be concerned. You may want to consider seriously dropping the course and taking it again next semester, because I don't negotiate on grades at the end of the semester. If you performed poorly all semester and you're sitting there at 250 points right now, you need to drop the course. And I'm just telling you. So if I don't know what the average points are right now, but most of you are doing fantastic. The ones who are at the very bottom, though, as always, you're not going to be able to negotiate your way out of that at the end of this semester. Sorry. How many points did you say? I'd say that's pretty good. Aiden, what do you have? Do you know? 475 is not bad at all, because remember, you got 200 points for the capstone, 200 points for class participation. So that would be a total right there, right now, of 875 points. And I'm assuming you'll get all 200 points for your capstone unless you really miss something. And same with class collaboration. So if you got 475 points, you're doing great. You bet. Y'all have a good day. Yeah, bye. Okay. Yes. You, yes. I So I've gotten that question from a couple of students, and I went in and upgraded the score. Did I not do that for you? Will you email me one more time and I'll do that today? I'm sorry I missed. Yep. Okay. You bet. Thank you. Okay. So that question was good too. If you know you turned your assignment in early and you can prove it, and I didn't give you the extra points, I'm happy to do that. Sometimes it's a long story, but Blackboard isn't always as easy to sort. And so, anyway, yeah, if I owe you extra points, I owe you extra points, but please let me know and I'll get that taken care of. All right. Any other questions? Going once. Oh, yeah, I do take late work. You get 1 point for being late, but it's really important that you do the assignment, because otherwise, if you have a zero, that makes me really look closely at your class participation, and you will get deductions if you have zeros. So even though you get 1 point, it's a big one. It's important. Okay, so yeah, do the assignment, submit it in Blackboard. It will be late, you'll get 1 point, but it won't cost you any other points in terms of participation. And so, yeah, does that answer your question? Okay. Okay, I'm going to shut down the broadcast. I think it's still going. It is. Goodbye. See you.